The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I will be speaking about gold. As usual, I will be providing a complete multi-time frame top-down analysis first. I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective. So commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, we're using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this commodity. We also are currently running the Black Friday month for the mentorship program. The link is in the description. You have a massive discount, and you have also the possibility to get a full refund directly in your trading account, since we have partnered with the forex broker Blueberry Markets. So it's never been this easy to join. I really suggest that you go and check that one out. The link is in the description. So let's get straight into the analysis. Starting here on the monthly, what we can see is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market here has just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this monthly impulse, which was a very strong level of support and demand here. Again, support and demand here. And as the market has already rejected it twice, we can expect the market to provide more continuation to the upside, considering that at the moment we are also in a quite high inflation situation, meaning that stores of value like gold should appreciate in situations like this from a fundamental perspective. We can also notice how we have this potential inverted head and shoulders here, which the market has printed once again, indicating for a potential continuation to the upside. Dropping down on the weekly time frame, what do we see? Now here on the weekly, we can see that at the moment we are testing and rejecting quite strong historical structure. In fact, this zone was acting as previous resistance here. The market broke it to the upside. At that point, it started acting as support here, again here, and again here. And we can see how the market tested this level multiple times, and at the moment is rejecting it to the upside in a quite aggressive way, which is exactly what we wanted to see. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now here on the daily, first of all, I had spoken about gold quite a few times in the past. I spoke about it when the market was around this area. I explained all the reasons for which we wanted to see the market create this impulse. We had the impulse, then correction. From here, I made another breakdown explaining all the reasons for which we wanted this continuation. Then we had the continuation, and after that a complex correction, after which I explained why, if the market would have shifted back to a bullish structure, we could expect a move to the upside, and the market shifted structure and created the move to the upside. Now, by the way, I will link all these previous analysis in the description, so you can go and check them out for more free education. Then what we said after this impulse is that we expected a correction before the continuation to the upside. However, what we can notice here is that in creating the correction that we wanted anyway to see, the market has started creating a new pattern, which is basically this M pattern here. This is why I'm obviously making this update. Now, in general, after the creation of an M pattern, what you expect is for the market to create a move to the upside, to go and complete the pattern at the previous support turned resistance. So here in the daily time frame, what we can expect is for the market to provide more continuation to the downside and then create a move to the upside to complete the pattern itself at the previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the non-commercials, so the biggest speculators, therefore hedge funds, are doing in the market. What we can see here is that lately with the last reports, net positions have been increasing. We went from having 168.3k net positions up to having 259.7k net positions with 360.5k longs and 100.7k shorts with the last report. And we can see how with the last reports we got first 30k longs getting added and then 19.4k longs getting added. So on gold, we are seeing massive buying from an institutional perspective, which obviously correlates with what we already want to see here from the technicals, because we have already identified that we do have a quite strong bullish momentum at the moment on gold. And if the market will actually print this M pattern, there is definitely a possibility to be looking for a long opportunity here for the completion, at least at the neckline of this M pattern. So the way in which we will be approaching this with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, if the market will provide a deeper correction, really printing that M pattern, at that point during this move to the downside, what we will be doing with students is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And only if the market will shift from an intraday bearish to a bullish market, at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is this previous support, turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.